start? Stats. I always love stats, and I'm going to tie this into the foreign investors. And most of all my research is from this report that just came out on the 22nd by Ben Myers of Fortress Developments. You can download this 70-odd page document. Yes, that is the URL. I kind of typed it wrong when I first linked it, but that is it. You can download it right there, gmrealty/fall2106. But it is if you like reading and if you want to fall asleep at night, this is a great document. But it is a great document if you go through it, and there's some really key elements in there of what he sees that is happening right now, what's going to happen. And I was actually a part of some of this research. He sent out a link to probably about 5,000 realtors across Canada, and we all took part in the survey. And it was, and he goes over some of those findings there. You know, questions like, what's the percentage of your buyers are foreign investors? And are your sellers afraid of selling their home? Things like that. And he goes into depth of what the answers were and everything like that. So, but what does he say about foreign investors? Is there going to be a tax here in Toronto or Ontario? And we're going to dive into that. And first of all, we need to understand, why are they buying here? Why are foreign investors coming to Canada, right? And I'm gonna give you 10 reasons why they're buying here in Canada. And the first is operational advantage. So what does that mean? That means we have great systems already in place for real estate investors. Believe it or not, we do. Compared to other countries, we are by far leaps and bounds ahead. I like this one, intellectual advantage. Say what you will. Other countries, compared to other countries, our systems, like, we're really smart. So pretend that, act like it. But from you know, the way properties are purchased and sold, the legal system, the infrastructures and everything like that, far better than the alternative where they could be coming from. And that leads us into this next one. Lack of local investment options, right? When you're looking at opportunities, and we'll use China as an example because that's where the majority of the investors are coming from. Compared to China, what can they buy when they come here? And that's what they're factoring it against. We have far greater opportunities. Lower cost of capital, and I'll dive into this a little bit deeper in a few moments. But of course, they bring their money over here, and all of a sudden they get a greater return just by bringing their money over. Portfolio risk reduction. It's very, very safe to purchase properties in Canada compared to where they are purchasing properties. Of course, we have our own little markets where we wouldn't buy in, but we also have markets that we would buy in almost every day, right? So it's a safe haven. Next, established roots. Yes, there is a segment of foreign investors that do want to establish roots here. Perhaps it's a property for one of their children that are going through university or family members. There's many properties that are purchased strictly for, you know, the young family and mom and dad are still going to stay home in China. We know that, right? We've seen that happen. What do we got? Appreciation. Has anyone seen appreciation in the last 6 months? In here? A little bit, yeah. There's some giggles, right? 12 months, 24 months. Of course, there's appreciation here. And has it been as drastic as it has been in the last 6 or 12 months? Not typically, but the long trend is, yes, we do see appreciation. Even in the slow turning markets, it's typically a couple of points every year, which is far greater than what they're getting elsewhere, believe it or not. Parking of money. Sometimes, believe it or not, somebody will invest $500,000, $1 million, and really not expect a return. Can you believe that? Because what do they want to do? What is their number one goal here when they park their money? Isn't that incredible? Like, yes, that should be always our number one goal, but if I'm going to invest, I want to know what that return is going to be. I want the upside, but they they actually don't want to lose it, which is, it's tough for us to fathom, but anyways, that's part of it. Of course, safety of assets. In most of our markets, it is, you know, we're buying in safe neighborhoods, for instance. Again, we can always find that one street we would never buy on, but in any case. And yes, they are buying recreational properties. Perhaps, and I'll dive into it a little bit deeper in a moment, is maybe the trophy house or the type of, you know, lakefront homes or cottages that they're looking for. Things they can't typically get where they currently live or or wherever that may be. So those are 10 of the reasons that that people are buying here. And the biggest one, I believe, is this one, is our loonie. They, as soon as they bring their money from, I say they, as soon as Chinese investors come and move it to Canada, their funds, do you know how much return they're getting right away? Well, how much faster their money grows right away? It's 20%. Unbelievable. So they bring $1 million, they actually end up with another 200,000. No wonder they can outbid a lot of people on properties, right? Just by sheer moving money around in different, like currency exchange. So that is a huge one, absolutely huge, and they're typically can buy with cash. So that leads us to here, the exchange rate. All cash buyers for the most part, but I've been on cases where we've been representing or on the flip side selling properties and they've had financing, but not near as what you think it is. It's often said that investors are highly leveraged, foreign investors are highly leveraged. We know that's not the case. It's probably, if I were to guess, 40, 50% loan to value when they are getting mortgages, which is crazy, right? Down to obviously zero. They have cash. Maybe they'll refinance that later and pull out some Canadian equity if they want to buy more, perhaps. But they're very well established purchasers and buyers. So the stability of markets. Here's a graph. Don't you love graphs? These are apartment rental rates dating back to 1991. So we look for stability in markets, right? And that's why we buy. We buy for location. Usually we buy for location, right? Dating back to 1991, we only had 1 year where actually declined in the rental rate, moving up every year. So every year there was a bump, what you could charge your suites for, right? That is a great indicator of a strong market. So what does Vancouver look like? Because that's another haven we know for foreign investments. Look at that. Now, the highest there was ever was 4.5%, but in fact, if you look, only in 98, 99 did they actually even go down a little bit, but they never had a decline where it went below the previous year, for instance. It never went down. It was always an uptick, uptick, uptick. Another stable market, right? So how does this affect us? The benefits and the costs. What are the benefits to us? Because that's who we care about, right? Us? Yeah? Yeah? Okay. The benefits. It creates a spin-off, right? The ripple effect. And I'll show you some stuff in a moment. Home sellers are obviously benefiting because of our appreciation has skyrocketed. I did some research the other day in Stouffville, where I now live, since March to August. Anybody want to take a guess on how high the market has increased? I should have rephrased the question. I'm going to say yes, because I don't know that specific. How much money has it increased? So in that 6-month period, the average price of the home has gone up $160,000. Now, this is Whitchurch, Stouffville. It's a big area. You have the town of Stouffville of about 30,000 people, and then Whitchurch, Stouffville is 44,000 people. So we're selling homes in the $3, $4, $5 million ranges, big estate homes. So understand where I'm taking my numbers from, right? A few of those homes sell, and it changes the numbers, right? However, the average price in Stouffville, including those numbers, is $1 million right now. Unbelievable. It's climbed at 20, 27%, 19% over the last few years. It had to catch up to some of the other markets. All the other markets around in York region have shot up like that. They've all had double digits in the last 3-4 years. The only one that hasn't, that is sort of close to York region, north of Durham, is Uxbridge. It actually had a decline this year. Don't ask me why. Couldn't tell you why. It had a decline of just like 1% from last year. I don't understand it. I need to dig into the numbers, but I thought that was interesting. Of course, it helps immigration, boosts non-residential investments, supports new sales. It's easy for me to start talking about selling homes because of everything that's going on around us, right? It's easy, if you're a home seller, easy to sell your home. Cost. Well, what's the flip side? What's the cost of this going to be? Of course, we've got some marginal buyers now. It inflates prices. And I'm going to stand up here with my real estate agent's hat on and actually say this. It throws out our fundamental pricing like you wouldn't believe. Hey? Like what real estate agent says that? I have no idea sometimes how to price something. And that's just the honest, good to down to earth. That's the easiest way I can say it. I don't know any other way to say it. I can tell you that I'm going to list this house at market value at 500,000-600,000, whatever it is. But I'll tell you, somebody could come in here and pay another 100,000, easy. We just don't know, and it just kind of throws out all those fundamentals that we typically rely on. Amina. So, yeah. Absolutely. So, my experience with that, just in the last couple of months, I sold a property and we killed it. We got a great price. We had 4 appraisals on it. Everyone was all over the map. And they were all different. They kept trying different appraisal companies because everyone comes in different. And if there's no comps to support, you would know in the mortgage broker or industry, if there's no comps to support that price, they have 2 choices, as you said. If the appraisal came in at 900 and we sold it for $1 million, they're on the hook for that extra 100,000, for instance, right? So what do? They got to make a choice. And where some buyers have the advantage, because we talked about this earlier, they don't care. Because guess what they got in their pocket? Cash, right? They don't care what it appraises at right now. And that's how they're getting around, or not getting around it. That is their solution for the moment, right? But when it comes to doing comps and doing a market analysis of saying, I'm going to list your home for this price, this hand over here, I'm going to tell you, hey, we might kill it on the sale, but I got to tell you, it's going to be about here. Expect this, but I'm shooting for this, and I think any investor needs to understand that. Any investor. And the last one, hey, it can happen in hot markets or slow markets. I don't care. If there's more transactions, what's going to happen? There's going to be more fraudulent activities, right? It's just a numbers game, but it's important that we're aware of what could happen, what potentially could happen, right? Okay, next slide. Yearly change in new home prices. Let's have a little fun with this. So this is only new home prices, okay, dating back to what? It goes by quarter, dating back to 2006 and right up to June of this year. So we've seen all the prices go up and down, and there's 4 colors here. Hopefully you can see that. And last year, there's 4 categories of homes, and I want you to guess which is which. So we've got condos, townhouse, 2-story homes, and bungalows. So since last year, of those 4, condos, townhouses, 2-story homes, and bungalows, what do you think 7.9% is? What category? Condos. Condos it is. You guys are on fire. Love it. Let's go. Can we run the board? We'll see. The next one, 14.4%. So we've got bungalows, 2-story homes, or townhouses? Townhouses. Really? Oh, we can do this. So what do you think the number one appreciated value for a builder is? Pardon? 2 stories, bungalows? Are we 50-50? What's go? 2-story? Okay. Bungalows are at the top, 20.5%. Why do you think that is? Aging population, any other hard to find? Cost? Bigger lots. It costs more for builders to build what? Bungalows, right? Scale of economy for them is townhouses for sure, and then 2-story homes. They build far less bungalows than they do the other products. So of course it's going to appreciate a little bit faster, right? But if you own a bungalow today, or you're an agent in here, what should you be telling those bungalow owners? Right off the bat, they get a 3% bump, right? It should be valued 3% higher across the board. It just should be, because there's far less of them. And we're all investors in here. Some of my favorite properties to buy are bungalows. Why? Second suites. Bungalows are have a far bigger footprint, right? Right, Andy? I think so, yeah. Far bigger, right? and you end up with a much bigger suite. those classic 1960 bungalows are already set up for two suites, right? They've already got the side entrance. You can go up or down. Far better in my opinion. But I thought that was interesting. Again, this is only based on new home prices, so make sure you understand that info. But it should translate over to the resale properties, right? Resale for sure. Cool. What's next? What's this? Ripple effect. That's right. So I mentioned before, some foreign buyers are buying those big trophy homes, right? They're coming in and they're dropping, I'll tell you, they're dropping 4 or 5 million, maybe more of those homes. What does that do to the buyers that were going to buy those homes? They got to buy something else. So now they're buying maybe something at 2, 3 million. What's happening to those buyers? They got to buy something else, right? Where everybody's getting pushed down. It's getting rippled down, right? So that means the market is like it's rippled all out. And in hot markets, or at the peak of a hot market or the low of a market, where are the biggest ripples, right? In either of those two spots, right? So when the hot market is booming like it is right now, those ripples are the biggest, are they not? If you looked at the ripple and you thought to yourself, you know, where would if Toronto was the center of it is. The center of the ripple, the center of the universe, right? Where in the ripple would you want to buy? Outside? I think so. I don't want to be in the middle because it's the most expensive. How am I ever going to get a cash-on-cash return? Meaning, is it ever going to carry itself? No, that should be the key there. No, I want to buy out here somewhere, right? You know, maybe that ripples is up to Barrie or Orillia or out east in Oshawa and things like that. That's where I want to be looking, right? Because that ripple is certainly hit those markets, and it hit it last year already. But there's still some opportunities out there. Even here in Newmarket, there's not. I'll tell you flat out, there's not a lot of opportunity for cash flow here, unless you're getting a steal of a deal. So you got to start looking to see where that ripple is leading towards, right? For sure. Okay, and here's something, we have a few more slides here. Here's something that I had to go digging for, and it's not being talked about. So population change, that's the first two columns there. Do you know since last June we added, or 89,000 people moved to Toronto? This is Toronto. Check out this, employment. We actually added 69,000 jobs. So almost every one of those had a job. And I'll bet you not every one of those 89,000 people were even looking for a job, right? Maybe you know, one income can support the family. I don't know, but typically not. Or typically that's the case, I should say. Vancouver, 36,000 more people. Look how many jobs they added. So obviously a lot of the people that weren't employed now have opportunity to be employed, right? This sort of stuff isn't being talked about. So the next few slides, this is just pure facts out of Ben's report. Of course, we know governments across the globe are taking action to curb foreign real estate investment. So back to the investment or the foreign investment tax. Where are we going to go? London, where there was a tax introduced. House prices and growth still remain high there, even though there's a tax. Still remains high. Next, restrictions on foreign buyers in Australia have not resulted in decline of house prices because local Australians are still pushing that market, right? So we're just going over some of the things that are happening worldwide. In Australia, domestic investors have a greater impact on the Australian house prices than foreign buyers. Well, of course, there's far more of them, right? There's many more Australians buying properties than there were foreign investors. Lack of supply is the likely cause of house price appreciation in New Zealand. And I got to talk about that in a second. It's always supply and demand, right? Supply and demand. Vacant home tax is a Band-Aid solution. So in some cases, they've even thrown this out in Vancouver, and there's a lot of empty condos, and they said to themselves, well, why can't we tax that? Well, what about the guy that owns a condo and lives there for 4 or 5 months of the year because he wants to spend the rest of his time in Florida or California, right? Like, I don't know how you gauge something like that. I think that's kind of a silly Band-Aid solution. I'll use their words. So in conclusion, we know low supply equals high prices. High prices is obviously the big ripple effect, right? Restrictive laws in London, Sydney, Auckland, the market's still hot there. Like things are still moving, even though they've tried to put the clamps on it. Here in Toronto, or I should say all of Ontario, people are asking the government to do something. They don't know anything else other than, well, Vancouver did it, why can't we? Because they're not creative enough to think on their own, I think, right? I don't know. And the funny thing is, so Vancouver, the city of Vancouver introduced this foreign tax. But do you know what's happening in May of 2017 in BC? There's a provincial election. So do you think maybe, I don't know, I'm thinking out loud. Do you think maybe they went ahead and provided this change or this tax so they can say they did something really significant within the last year that's going to be on the top of people's minds to get reelected? That's just me. I don't know. I'm just saying. I don't know. But here in Toronto or Ontario, like we don't know any difference. So people just listen to what other people are doing. Yeah, we can do that. We can do that. Let me remind you, what happened in Toronto, I don't know how many years ago, 6, 7 years ago now? What happened with the taxes in Toronto when you would purchase a property? Double land transfer tax. Did it slow it down? No, not at all. It didn't miss a beat. Maybe for that month afterwards, because everyone wanted to close before the June 30th. I'm picking a date. Before June 30th, before July 1st started with the new tax. Same thing happened in Vancouver. It was the busiest June or July ever. Then August, it was the slowest month ever for closings. Well, yeah, because I don't want to, if I'm a foreign investor, of course I want to close in this month. So, tax, please, I beg of you, if you have the power, I'd say no. Like, don't introduce it. But if you do, like, I don't think much is going to happen because they still need a place to park their money in what? Safe havens, right? And they come to places like Canada because our government's very safe. Very, very safe. If you had a choice right now, of course, we're all biased, but I'm going to give it to you anyways. If we had a choice, and if you had money to invest in Canada based on our government, the stable government, and the U.S., I'll just stop. Where would you want to put that money, right? Like, I don't know what's going on with the elections down there, and I can't even wrap my head around it, but we should be so thankful for being in Canada and having the stable government. Like it or not, like the leadership or not, it's still stable, right? So, to me, I think that do not be surprised if it's introduced. The sky's not falling. Things still happen. Closings still happen. Homes are still bought and sold. But you know what? If it does happen, we think a little bit left or right of the tracks, right? There's got to be an opportunity there for us to seize, and we'll figure it out. We'll definitely figure it out. So there you go. So there's my little tidbit on foreign investors, the tax. Is it happening or is it not? I still don't know, but we got to be prepared if it's going to happen, right? And what's the ramifications of it? So beautiful. Thank you for going through that with me.